In today's video, why the lights going out in San Francisco just handed Tesla a massive win, a possible scenario for Tesla shareholders to get into the SpaceX IPO, and stick around till the end because I'm breaking down the charts and giving you my exact price targets for Tesla and 5 other stocks going into 2026. But first, let's take a look at the broad market. We are kicking off this holiday week absolutely bullish. What looks like the start of a possible Santa rally. We're seeing low volume, but we're seeing also high conviction. Wall Street is effectively betting that this tech boom is going to carry over right into 2026, as we've seen massive options flow coming in all of last week and continuing into this week, although be it with smaller volume. But while the market was green today, the lights went black in San Francisco this weekend, and it accidentally revealed the winner of the self-driving race. Now, if you haven't seen the footage, it's pretty wild. A massive power outage killed traffic lights across the entire city. And what happened? The $100,000 Waymo robots froze because they rely so heavily on HD maps and server connectivity, they became 5,000-pound bricks blocking intersections. But the Teslas on full self-driving, they just kept going. Why? Because Tesla isn't driving by GPS or 5G. It's driving with eyes. The neural nets saw the lights were out, treated the intersection like a four-way stop, just like a human would, and navigated through the chaos. But the biggest news for your bank account isn't the blackout. It might be the SpaceX IPO, with a little bit of luck. Now, Elon has officially hinted at a 2026 target for the SpaceX IPO. The reports were putting the valuation somewhere around a staggering $1.5 trillion. But here is a possible scenario not being discussed that much. A structure called SPARC to take SpaceX public. In a normal IPO, you and I don't get access. The shares go to Goldman Sachs and their wealthy clients. But in this proposed SPARC deal, if you own Tesla stock, you would receive a right, literally a tradable coupon in your brokerage account to buy SpaceX stock at the IPO price. This may be also assigned as a lottery. It may not be available to all Tesla shareholders. Of course, rumors, people are talking and discussing what possibly might happen. The math being thrown around on X is 1 to 0.5. So that means for every 1 share of Tesla you own, you might get the right to buy half a share of SpaceX. Now, if this SPARC structure is approved, there will be a record date. If you aren't holding shares on that specific Tuesday or Wednesday, you get nothing. If you try to wait for the announcement to buy the shares, you're too late. And again, hypotheticals. So what does this mean for the price? Let's break down the options flow and the charts for both Tesla and the broad market so we can find some clues about what big players are doing on Wall Street. Now, quick reminder, this is not financial advice, so please do your own research. All right, heading into the options flow, on the bullish side, we had a lot of money coming into Amazon. And like I was saying in my weekly video that I made over the weekend, Amazon was looking pretty good. And when I saw the bullish flow coming in on Amazon through the options, I decided to open up a position. After that, we've got Meta, Oracle, and some money coming into MicroStrategy, interestingly. On the bearish flow, we have some puts on Tesla, quite a bit of volume. But we're going to compare and show you how much people are bullish versus bearish and how much money they're putting down in options. So this has been going on since, I think, Friday, and then it picked up a little bit more today. This could signal that we may be getting a short-term pullback in Tesla. I think it's a possibility. But overall, the money is stacked on the long side. Also, some shorts flipping on NVIDIA. It was more bullish, I believe, on Friday. And the rest here was very low volume. So when you compare kind of like the left side here versus the right side, what do you see? Much bigger volume on the bull side. Now let's go into the gamma exposure, and this gives us a visual representation of where the money is being stacked. So for the SPY, you'll see that most of the money is stacked on 685 to 689. a little bit more up here, all the way to 700. You probably have some people betting on that we break the 700 zone into next year. This is for all expiries, and we're going to break it down further. Now, if you go down a bit, you're going to see that there aren't that many shorts. Put wall at 670, whereas we have here a call wall at 685. And we are right here. This is the spot price and where the call wall is. So we closed right on it. So any push later this week is going to break this call wall and send us flying much higher. There is a possibility that tomorrow we may get a nice run. We're going to see what happens, but the volume today was really low. Flipping over to Tesla, we'll see that our spot price today was around 490. We have a little bit of calls here, a little bit of 495, and a lot of people stacking on the 500s. You go up here, 550. We have some people looking at 550, but it seems that right now the money has redistributed to target the 500s. There were a lot higher volume up here at much crazier targets. You'll see here, yeah, 600s, that's the one I was talking about, but it's thinned down up there. So people are kind of positioning themselves still bullish, but for more of a short-term move. And that could be because of various reasons. The market is low volume right now, so it's hard to get a clean signal. Holidays coming up, and when you own options over holidays, you still get that decay, and that means you lose more money. So it makes sense that people are positioning for closer targets, and that's actually what I did today. I had my 550s on Tesla, and they were for January. I felt that that was going to be too far out to hit the 550s. It may take some more time than I anticipated. So for now, I'm holding just the 500 calls. All right, so let's take a look at the SPY. As you can see here, we had this interesting candle form. And what this tells me, this long wick down here, is that we opened up high. We tried to pull back to the support area, and it held. We found buyers coming in, and then it pushed back up into the close. So this is very bullish, and we are above the EMAs. The volume today was a little bit below average, but not too bad. MACD looking a little bit bearish, but that could flip at any moment now. And RSI kind of hovering in the middle. So we're neither overbought nor oversold. And that is a good thing, because that tells us that we may not have yet exhausted this trend to the upside, until we see the RSI get up a little bit higher. So we could see a nice breakout here of these highs in the next day or two. Looking at the triple Qs, I applied a different type of analysis here. And what I'm outlining here is this channel, that hypothetical channel that we might be in. So if we come up to this area here and then we fail, that could bring us back down to this point of control at 599 or even lower down here. I'm not predicting that, but I like to lay out all the scenarios. The best case scenario I'm hoping for, a base case, and the worst case scenario. So we're going to just be watching these levels to see if anything changes, if we get a rejection up here or not. Now, looking at the small caps, you'll see that we have reclaimed this area here of resistance. We had come above it, and I had said previously that if we break this, it's very bullish for small caps. So we did break above it, and then the market had a nasty pullback, and now it's actually gone above that level. So this is likely setting up to around 264 to 269. So on the Tesla chart, we did here break out again a second time and tag a new all-time high, but not enough buyers stepped in to push it. So it's okay for it to take a breather here. I think it's fine. If we do fail this move into tomorrow, we could be looking at a retrace back to the 21 EMA, which is moving upward. The more time this takes, the more the 21 will catch up to it. And as we've seen here, it bounced off of it. This is the beginning of a new trend. We had one bounce here and a second bounce here, and we may get the third one up here. So if it starts to pull back, no need to jump out the window. It's okay. It's just probably a pullback. If, however, it starts to break below this level here, which is around 460, this is like my line in the sand, because let me clear this out here. Because if you zoom in, you'll see this candle right there and this one, there was an area of resistance here. That's why this rejected off here, and then this second one went through and pulled back, and then the stock, decided to cheat a little bit, and they do this sometimes. They will gap above it. But when you leave a gap like that behind, it sometimes triggers a pullback down to this level, because gaps act like magnets, and they have like a 70%, roughly 70% chance of being filled. But keep in mind, it's never 100%. So what I'm going to do is I'm going to mark down this level here. This is like my line in the sand on the Tesla trade. Now, if you're a long-term investor, this doesn't affect you. I just have my stuff that I invest in separately from stuff that I swing trade. And currently, I'm swing trading some options on Tesla. Now, you may ask, what's up with these two big yellow arrows? So when I was zooming out and doing my analysis earlier, I remembered this is when I first pointed out Tesla, was right around here. For people that were subscribed to the channel, I was telling them that we had this triangle here that we broke out of. And this is the beginning of a trend shift. Before we even break the highs, this is a trend shift. We've broken a trend. So this is where I took my first long on Tesla on the options. I hadn't been trading it for a while. It had been just totally getting wrecked and then totally chopping. Now, why am I bringing this up? Because what's happening here is that we had this one breakout to the upside, and then now we had the pullback, and now we're going up for the second breakout. Theoretically, you can expect that we should have at least an equal move or greater, because this structure is just building up like this, 1, 2, and then 3 to the upside. This could take us to about 591 sometime. I'm estimating Q1 2026, as long as the tech rally continues. Now, if we're to do something called a measured move, we could start here from the beginning of the old move to the top, and let's just keep the line straight. There are two ways to do this. This is the way I'm doing it today. So this is kind of like your measured move. Will take you up to around 520, 530. So this is like our conservative target in the short term. Are we going to have some resistance along the way? It seems like it. However, there's going to be drawdowns, and it's going to move back up just like we have been doing. Nothing goes up in a straight line, so you have to be patient with this. Also, if you zoom out a little bit here, you'll see this long-term trend line I've been pointing out for a while. One here, one point of contact here, and we're approaching the third one. So if you actually look back from November 2021, Tesla has actually just been trading sideways. As crazy as that may sound, it's true. Tesla's been trading sideways, and we're about to break out of it. So this is just like really zooming out, looking at a several year time frame. If this starts to break out, then I think we're going for a much bigger move. This would be an inflection point for Tesla. Kind of like, when here, we had that big drawdown, and then we had this big move to the upside. So we could be heading up much higher, in my opinion, if the narratives hold, if Elon Musk continues to deliver on his promises. Now let's take a look at 5 stocks that I'm trading right now, and I think these are going to do pretty well into 2026. Going on to Coreweave, we had this long-term trend line here, and I had first started trading Coreweave around this area a couple months ago, and what happened was it just kept hugging this trend line until it had some exhaustion, rolled over, we got dead cat pounds, and then it came back down. And that's what happens when you fail at a level. You come back down to test the support levels, but this went really hard. Now, you got to ask yourself on Coreweave, whether you're investing in it or you're trading it. I'm trading it. I think that it's pretty good either way, because obviously it's been beaten down pretty heavily. And now, after we've had this big drawdown, we form kind of like this W or a double bottom. And this double bottom is happening at a previous zone here, which we would consider to be support because it was previously resistance and then went back up. And then we have here at $74, this point of control down here, this red line. And what this signals to us is that there are a lot of trading that goes on down here. There's a lot of volume, When you're below it, it's resistance. When you get above it, it's support. So now that we've reclaimed this, now this is one level of support. And then now we kind of like broke through this level here. We see we have like another shelf or like a little node forming here. And that acted as a bit of resistance. We didn't get the follow through. It was looking really good on the opening of the market today, but it didn't have follow through. I'm still holding my Coreweave position. I think this deserves at least 1 or 2 more days to see if this can get above this line build structure. And then it's off to the races. I'm targeting around 104 up to 113. Likely in 2026. And now we circle back to Amazon. This one I'd brought up, I believe in my last video, I was telling everybody that I'm waiting for the perfect opportunity to jump on this. And I brought up this trend line here. We had 1 point of contact, 2, 3. We have this point of control here. So we have this zone where we have intersecting areas of support. Now it did come back down to the trend line here at 222, and then it had a bounce off of it. So we did reclaim the EMAs. It wasn't looking particularly strong. I mean, it was looking strong early in the day, and then it had a little bit of a pullback. However, the fact is this has come down, it is bounced, is reclaimed the EMAs, and long-term Amazon is in a bull pattern. So I decided that I'm going to get in on this today with a starter position. And if we get some follow through and this holds, then I could play the up to 239, take a little bit of profits up here and see if we can get some more to run up to the all-time highs. And, you know, as I showed you today in the options flow, people are buying Amazon. And by people, I mean big money. Those multi-million-dollar transactions you see on the options flow, it's mostly institutions, hedge fund managers, you know, people that have that big money. Of course, there are some retail traders that can put down that type of money, but they are very few compared to the institutions, which pretty much move the markets. So now that it seems that Wall Street is pivoting bullish on Amazon and the charts are supporting that theory, I decided it's worth giving it a shot. Now, with any trade, you have to ask yourself where you're wrong. And for me, what I like about this trade is I can have a very tight stop here around 221, 222. So a little bit of room to breathe to the trend line if it needs to pull back a second time before it goes up. If it breaks through here, then I get out. That way I cap my losses and I have real good upside targets, upside potential. You can measure it from here to here, about 4% to the highs 13, and I'm risking about 2.6%. Google, this one I have been watching for a while, and likewise, I've been saying you have to wait for the perfect opportunity to get in. You gotta wait, kind of like a sniper. You know, they wait for the perfect time, the wind's blowing the right direction, everything is lined up, and then you take the shot. So that's what I've been doing here with Google. Once we had a series of incredible news on Google, and it hyped up the stock like crazy. And I was tempted to get in here. I was tempted to get in here, and I held off, which is good. Until now, we have come down and filled this gap. So that's out of the way. That risk for a pullback is out of the way. And, you know, we got overextended a little bit. I did not want to go here. Trading off the 50 EMA is a little bit harder than when you get a bounce over the 21 EMA. The 21 EMA has a higher percentage of success if you play a bounce off of it when the trend is in your favor. So, you know, we did overextend on this pullback, but we could get now a big continuation to the upside. And let's look at how that could unfold. If we do like a measured move, something along this lines with the same angle, that could take us up pretty high, about 386. Another way to look at this is to do some fib extensions. You know, we don't have to take, I mean, we could take from the bottom here all the way to the top. That would give us about these targets around 350, 364. That's one way to do it. And you could be more conservative and consider that the move started from here down to here, and that'll give you your short-term target. kind of lines up also. The 0.786 lines up at 342. 342 is looking like my main target, and just going to mark the target zone here so we can see it more clearly. And then let's do a measurement. So if we were to set our stop down around here, around 298 or 300, that would give us downside about 4%, 4.5%. And then up here, that's 9, 10%, maybe even a little bit more, 11%. So this matches up with my 2-to-1 minimum on risk reward. And the options were not very expensive, so I figured it's worth a shot. Anything I mentioned with options, you could do with stocks as well. It's just that options offer you leverage, and it requires more planning and more precision to get into it. And if you see here, we could kind of like draw this trend line. I'm trying to get it best. All right, probably like this is the best, or even like that. So, you know, we are holding this trend line as long as this keeps holding, we're going to keep going up to that 341, 342 target. Pretty bullish on Google right now, and confirmed by the options flow today. The next stock we got is IONQ. This one is really hot right now because of a news release. I was trying to trade this one through the chop, and it did not work out for me. I had pointed out that we had an inverse head and shoulders here, and then we had the breakout, which was great. And I said, you know, you have the neckline, and once you break out and confirm, then you could extrapolate the height of the head and shoulders upwards, and it'll take you about 62.35. And of course, you know, technical analysis, it works as long as we don't get a lot of crazy news. And that's what happened. We had the Fed, we had the Bank of Japan, we had, you know, fears about the data coming out. So obviously it took a pullback. So now this kind of resets the trend a little bit, but my target is about the same. I'm thinking this could get to 62 or 65, maybe by first week of January. We'll see if the traction continues. Today, it looked unstoppable because we had this big green candle all the way to the top, and it looked like it absolutely just burst through that point of control, but it kind of faked me out and it pulled back. So this is not really a confirmed trade right now. I did only start out with a starter, and the reason I'm like only doing small starting positions and waiting is because I want to wait for that big volume to come in early January. So for now, I'm positioning still, but I'm being conservative. That way I can catch part of the move and add into it if it continues into the first week of January. So why did IONQ start moving up today? You'll see here that Jefferies started coverage with a buy rating at a price target of $100, you know, highlighting their technological edge. And after that, you had Wedbush and Mizuho also began covering the stock, gave it an outperform, and they set targets of $60 and $90 respectively. So that's pretty decent. And you think of it like a $60 or $90 target. That puts us all the way up here. Let's see, $60 here. That's like around my target. This area I'm targeting up here, 61 to 65. And then there's the $90 target, which is all the way up here. So they're pretty bullish. And when a stock has been beat down that bad and you get these crazy analyst upgrades, people pile in. That's what retail does. I don't typically pay attention to analysts. If they upgrade a stock while it's beat down, I may pay attention to it because that could pull investors in. However, if a stock is really high and they start saying buy in now, sometimes most of the time I just ignore it because they might just be unloading on people and rebalancing. So just, you know, my 2 cents. Looking at the RGTI stock, looking very similar, except one difference. Here we tag the point of control on IONQ and pulled back. RGTI, on the other hand, has broken right through it, and then we got another one up here around $30. So I did pick up some $30 calls on RGTI. It's very low volume, or actually I take that back. It's higher than average volume, but overall much lower than the volume we had here during that mania phase. So yeah, I picked up a little bit of each. I'll see what happens into next week. Micron, and this one is extremely bullish, let me tell you. First up, we got a nice uptrend and we broke out. Now we have a breakout pattern. And then on top of that, the volume is slightly above average, so not bad. MACD flipping green, second candle green, and the RSI is tilting a little bit upward, but not in overbought territory yet. So this could have more room to the upside. And I'm targeting, based off the Fibonacci levels, 281 to 305. I don't have a play in Micron right now. I traded it before, when it was breaking out below. I believe I played this breakout all the way up here, and that one made me bank. That was a really good trade. We may be setting up for another one here. So it's still early. I don't have a position in it, but I'm thinking of getting in. I'd like to see it come back down to retest here, form structure, and then I'll take a long off of it. I don't like to chase when you have it just going vertical like that. That kind of worries me when I'm trading, because you might get a big pullback before you get the real move to the upside. So I'm just kind of like being cautious here, especially if it comes down to the 21 EMA. That is the perfect entry. Absolutely perfect entry for Micron. So I'm going to be a little bit patient with this, see what it does. If it runs off without me, it's okay. It's whatever. There are so many stocks right now that are beat down and getting ready to rip. And those are my 5 stocks that I'm holding into 2026. But I'll give you a bonus because IONQ and RGTI are kind of like the same play. Let's take a look at Meta. This one I am watching. It hasn't yet triggered the buy signal for me. It's setting up bullish. It is definitely in a reversal. So we've had this channel, we chopped around, we fell down, we left a massive gap up here. Now are we going to come back and fill that gap? Also, if you look here, we got this resistance zone, which I'm watching out for because that is going to be overhead resistance for the stock to reclaim the 741 level. So what am I waiting for now? Right now, we're kind of squeezing in between these 21 EMA and the 50 EMA, and you have the 50 EMA above, so it's not yet fully bullish. So once we get a crossover, that would be a better signal for me to go long, or you don't have to wait for the crossover. I would just like to see it break this high here. This candle up here is invalid. This was a misprint. If you switch over to a 4-hour chart, you don't have that big candle up here. So it's much clearer on the 4-hour. It's almost looking kind of like a double top. So I'd like to see this double top switch from this into a breakout. If we have a breakout above this level, fantastic. I'm going to take the long on it. And I have an alert set. That way I don't have to check on Meta every day. Just wait for the alert to trigger. That way there's no FOMO. I'm not chasing. You get the alert. You see if you want to buy shares or options, and you make, figure out what your position size is at the time. So I don't want to FOMO in here. It looks great. It looks like it's holding, but it could roll over at any point. So just being patient and waiting for the perfect entries. So I just want to say, guys, happy holidays, and going into 2026, watch out for that low liquidity. We can still get some exaggerated moves and pullbacks. Trading small and being patient here, trying to get the best entries, and we're going to see if we get continuation in the first week of January. Let me know if you have any suggestions for individual stocks that you'd like covered or topics you'd like me to go over. It can be anything ranging from, specifics about Tesla stock or something educational about swing trading. That's it for today's breakdown, and if you're still here to the end, you're the type of trader who actually cares about process, not just price targets. And that's who this channel is for. So do me a favor, hit the like and subscribe button so you can help me grow this channel. It's only 3 months old, and I'm doing everything I can to get it up and going. I'm also going to be working on educational videos. I have about 10 videos in the pipeline, and I'm going to be pumping them out maybe like 1 or 2 a week. So again, if you have any topics you want covered, please let me know. Enjoy your holidays, guys, and we'll get back to the trading in the new year. Take care. I will talk to you soon.